Now, as the SPY apparently decides to go on another nonsense pump towards the end of the day, regardless of what we have going on tomorrow, which is going to be a massive day for the markets. We have the FOMC meeting tomorrow. We're going to be getting those statements from Powell and a 75 or 100 basis point rate hike. But there are some things that you guys need to understand going into tomorrow, some key price levels and very specific things that we need to look out for once we start to hear Powell start to speak. And I want to make sure everybody's prepared for this because this is going to be a pretty significant turning point for our markets into the foreseeable future. So guys, if you wouldn't mind hitting that like button down below if you do enjoy the information and analysis that I provide for you guys in these videos here. And if you do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And I also have a little bit of a surprise for you guys later tonight, so make sure you guys have notifications turned on for that. I have something special planned for you guys a little bit later. So let's get right into it here and go through everything that we need to know. So again, we've had this 1348 cross down here on the daily time frame with the SPY. But if you remembered from yesterday's video or a little bit earlier this week, we were talking about this 4-hour time frame in this 13 EMA and how we were most likely going to reject off of this level here. This is a strategy that we like to use a lot coming up, retesting these moving average and pushing down to these new lows here. Now, again, we still have RSI above its moving average here. MACD isn't really giving us a clear indication of where we're going at the current time, but we do have ADX building this strong momentum trend here. Now, again, when we're looking at the market going into Powell, what we're most likely going to see is once the market opens, the market's going to fly around a little bit and then quiet. There's not going to be much going on until 2 p.m. Eastern when we get that first initial notice of what the rate hike is going to be and the Fed's expectations going forward. So again, if you are planning on trading before 2 p.m. tomorrow, it's probably going to be best practice to really try and get in and out of these trades very quickly because the market is going to go all over the place and everybody's going to be waiting for what Jerome Powell actually has to say. Now, we're going to be live for all of these things here tomorrow, and I do want to shout out a couple of our members here too. 8.5% on the day, Diamond Dog killing it again, Mike with a 10% day over here, and I believe as we come up here, Semi and Hemi has 52 consecutive wins with us. Again, guys, if you are interested in coming and joining the best place to learn how to trade, make sure you check out that link down below. We have a lot of awesome stuff for you guys. We have the algorithms, the learning videos, the curriculum, all the live streams, and some awesome things coming for you guys here too. But tomorrow, let's kind of get into what the market is actually expecting for what this rate hike is going to be, because this is what a lot of people are going to be paying attention to. So right now, this area right here, this target rate of about 300 to 325 basis points right here would entail a 75 basis point rate hike from where we are currently at right now in terms of the federal funds rate. That is an 84% probability right now that that is going to happen tomorrow. So what does this tell us? Well, the market in general is expecting a 75 basis point rate hike, but we have a 16% probability of a 100 basis point rate hike. Now, the thing that you have to think about here is that after the last CPI print came out, Powell is in a very, very interesting spot. A lot of people were expecting, for good reason, due to energy prices coming down, that we were going to see a decrease in inflation. We didn't. Now, what could end up happening here is we could see another Jackson Hole-like event. Now, if you don't remember, at the Jackson Hole Symposium, Jerome Powell came out and really took a hawkish stance and was essentially saying that he's going to do everything in his power to get inflation under control, no matter how much pain that is going to cause to the economy. He is very, very focused at trying to get inflation under control. Now, a 75 basis point rate hike might be what he decides to do, but in order to get public sentiment kind of back in Powell or the Fed's favor to really say, hey, the Fed's not really screwing around here, it's very possible that we do see that 100 basis point rate hike. And if we do, the market is probably going to sell off very significantly. The other couple of things that I want to bring out here is, so this is going to be for the September meeting. If we look at November over here, these are the target rates and basis points. If we look at November here, Previously, the terminal rate, meaning the highest that the Fed was going to increase rates to, was projected to be around 4%. Now, if for November they're expecting to already be at about 4%, well, then the terminal rates are most likely going to be a lot higher. That's why you're seeing numbers such as 4.25 and 4.5% for the federal funds rate floating around right now. And again, we have 10% probability for this 400 to 425 basis points coming out to December. That number gets a little bit bigger as well, 39%, 44.7% probability for 425 to 450. And we go out to February over here too, and we're right at around that 4.25 to 4.5%. This page right here, this Fed Watch tool, is going to be incredibly important tomorrow once we see that initial move in the market and we see that 75 or 100 basis point rate hike. This page is going to tell us what the overall market is expecting over the next couple of months. Are people expecting Powell to raise rates even more? Are those terminal rates going to go higher? If that happens, we are going to see bigger decreases in asset prices across the board. When we think about this situation here, a lot of what this is market expectations. We all know that the Fed is in big trouble right now, that they were asleep at the wheel, they didn't act quick enough, and now they are trying to play catch up. Now, what that catch up might entail is pushing rates too far up in one direction and eventually having to do those emergency rate cuts like we were talking about a little bit earlier in one of those private live streams this morning that you guys were in. To end up kind of pushing things back in the other direction. We've just seen it happen, but in the other way. We saw a lot of quantitative easing, a lot of money getting pumped into the market, and now we are drastically going in the other direction with these very, very aggressive rate hikes. Now, that kind of goes along with that hard or soft landing situation here, but at the end of the day, they just need to land the entire thing, get inflation under control, and get everything sort of back to normal over here. Now, going over a couple of these statements and key things that we need to look out for going into tomorrow. The Federal Reserve began its two-day meeting Tuesday, and economists expect the central bank to announce a third consecutive three-quarter point rate hike. This is really moving into restrictive monetary policy territory. We will be moving into no man's land, said one economist. We actually haven't tightened policy to fight inflation since the early 1980s. Any surprises may come in the Fed's quarterly projections on inflation, the economy, and interest rates. Scrolling down a little bit further here, it's not what they do, it's what they say. And this is something that you guys need to understand going into tomorrow. And that's why we were talking about those future projections for those terminal rates, because it doesn't necessarily matter what the Fed is going to do with their rates tomorrow. It matters what they say. If Powell comes out as super hawkish, says we don't really have all that much importance or all that much weight on letting unemployment stay where it is, and they are really going to be fighting inflation here and raising rates aggressively, well, that's not going to be good for the overall market. You're going to see home prices continue to decrease. You're going to see unemployment start to increase too, and there could be a lot of political nonsense that's going to come about of this because we're about to head into midterm elections as well. So the statements from Powell tomorrow are incredibly important, and those are going to be happening at 2:30 p.m. Eastern. Now, the last thing that I want to talk about here is due to all of these rate hikes coming out, that is going to limit the ability for our overall economy to grow. It's a tightening policy. It's not going to make things as easy to flourish in terms of the business development that we have seen basically in the past 10 years. Now, what we've seen recently are basically these massive just miscalculations or misprojections from the Atlanta Fed putting out their GDP estimates here. Now, we've gone over this in the past, but recently we have seen some pretty significant slashes in what the Atlanta Fed is actually looking towards for what they think GDP is going to be. Now, we've seen it all the way up here at this 2.5% range here, and it's fallen all the way down to now about 0.3% is their estimate. Last week, it was about 0.5%. So we are getting very dangerously close into negative estimate territory for Q3 GDP. If that happens, well, then we're also going to see another reason why the market could come down as well. But the Fed may not necessarily put that much weight on this either because inflation is still running rampant. So in order to wrap this up in a nice little bow for everybody, kind of going into tomorrow, again, the early morning trading session could come with a little bit of volatility, but you have to think about the fact that large large money institutional investors who have the ability to move the markets are going to be bracing and waiting for what Powell is going to say later in the day. So it might be a good idea to just sit out of the market. If you find a good opportunity, you want to go in, quick flip in and out, by all means, do what you need to do. It's your money. You can make your own decisions. But again, make sure that you are cautious of any trades that you are entering. And again, that 75 versus 100 basis point rate hike, you're thinking about basically public sentiment towards the Fed. If they come out with 100, you know Powell means business. If they come out with 75, again, that's what the market's expecting, and you still understand that Powell is trying to get inflation under control. But the most important thing that is going to come out of tomorrow are Powell's statements at his press conference that is going to be coming out at 2:30. And again, with this GDP situation, watch out for more data coming out. The next GDP Now estimate is going to be on Tuesday, September 27th, and we could see it revise lower again, maybe potentially even into negative territory after this rate hike coming out tomorrow. So guys, that is going to wrap up this update here. If you did enjoy the information and analysis that I provided for you guys in this video here, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who do want to learn. If you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. Remember, I have a little bit of a surprise coming for you guys later tonight, so get ready for that. But other than that, guys, I'll see you in the next one. Peace.